All right, let's do a mic check. All right, looks like we are green. And I think we are okay to go live. All right. Good evening, everyone. I'm trying a few different things. Just testing earlier times, just seeing just I know that people want to go to sleep or need to go to sleep, and I know I'm not going to be able to hit every single time zone here, but wanted to try streaming a little bit earlier, seeing how people like this. And if you do miss this or come on at 9 o'clock, don't worry about it. I'm trying to keep these short so that you can watch these and still be able to get to bed. So that's the goal for today. So we'll go through higher time frame analysis, see what we see for the week in the month, since we started a new month as well. And I think we can go ahead and get started here. So we'll take a look over at the economic calendar to get started, as we always do at the beginning of a week. So we'll start there. Let's go ahead and begin. All right, so this week you have a non-farm payroll week. You know what that means. Monday, Tuesday, Wednesday is going to be your highest probability. Hey, what's up, Jay Whitway? Oh, that's right. Jay Whitway, I did see your Instagram request. I do plan on responding to that. I haven't done it yet, so I'll try to get back to you on there. I have seen it though. I just haven't had time to get back to it. And I don't use Instagram nearly as much as I used to before to doom scroll. I try not to doom scroll on it. So yeah. Hey Kirk, good to see you, brother. Hope you're doing well. Good to see you both on here. So yeah, we're gonna try and keep it quick to get you the key bits and most important things that I see, in hopes that this might also inform your future take for the week. So key things as well, you know how non-farm payroll weeks are. This particular week is going to be a bit dangerous because that Fed Chair Powell testifying at 10 o'clock on a Thursday, in addition to having unemployment claims, you're going to see some wild movement. And I think this is going to be a really volatile day, Thursday, so be careful that day. But when Powell's testifying, I would not trust any of your setups that are happening until maybe, until he's done, and then maybe the true direction will move. But yeah, just be careful on that day. And then of course, non-farm payroll Friday, whatever positions you have, if you haven't had them for the week, then you're probably going to it's going to be some form of stop out type movement, because there's not only non-farm payroll, but there's also unemployment rate at the same time. So try to keep that in mind for Friday. This is going to be in this week. I actually won't be available. I am going to be traveling to Vegas on Friday, so I'm not going to be there on Friday. So I'm only going to be streaming on Wednesday this week, because that's the only time I'm home. Hey WAF, good to see you, man. Hope you've been doing well. So keep in mind, and I'm just going to see, I noticed that Monday there's nothing listed there, but one thing to note is that at 12 o'clock, there's a Fed speaker speaking. So you might get some movement around that lunchtime run on stops for Monday. That's something that I would look for on a Monday. So if you don't know what lunchtime run on stops is, go back and research ICT's content. He talks about that during the 2022 model. Okay, so now that we've looked at our economic events, let's go take a look at the higher time frames, because we just entered a new month. So this is our NASDAQ monthly chart. You all know where we are at in it. There's no surprise that we've definitely made a huge mark above and displaced above this area here. Now, these moves take a long time to form. So I think it's really interesting that we've got a lot of movement higher still. And yes, there's a lot of little ticks there. I need to get rid of them. But from a monthly perspective, and let me get rid of these boxes here so you can see it a little bit clearer. But you can kind of see how we have a monthly, if I can get this to work. Apparently my control isn't working to highlight things, but so you can kind of see how this area is still a balanced price range there. It's because we have had movement lower, and we have movement lower here, and then we've got movement higher here. So now that's a balanced price range on the monthly chart. There is a volume imbalance here that I want to point out to you. You would want to watch that. If we see price heading lower, that's the area I would expect it to potentially run for. Now, on a monthly perspective, we do see that the beginning of this month, we've headed upwards. So is it possible that we continue heading upwards? Yes. March tends to be a consolidation month, so you want to keep that in mind that potentially it could still be a consolidation month. So that's one thing you want to keep in mind. And you'll also want to take note that there is a little bit of a gap from this month's high to this month's low. So you want to keep that in mind as well. Do you have to pay attention to it? Will it go down there? I don't know. But generally, if we see consolidation, I wouldn't put it behind us that it could trade down into, at the very least, these old new week opening gaps. I only have 4 or 5 of them on this chart. That's typically good enough to refer to. But if we head down to this new week opening gap, there's a good chance we'll also trade back down to this new week opening gap. All right. Okay, good. So let's see what we have. I'm looking also at from a long-term perspective. I'm looking at the commitment of traders report. We do see that we've jumped from a 32,000 deficit, meaning like we were short shares, 32,000 commercials were short, that they removed a large portion of their shorts from 32,000 down to 17,000. Now, technically, they are still short. Now, let's take one more look at open interest here as well. So open interest, though, has gone up. So short interest is still there. It's not in the clear, and it's not in the clear completely saying that commercials are net short, but they are still net short, I believe. I need to go back and check the net value over the year. As you can kind of see it here, they are still net short, and in general, they're still net short, but they can be net short hedging while market is going higher. So we haven't seen the open interest drop yet, which leads me to believe that commercials are still net short overall, and they're looking for price to head lower in some way, shape, or form. So we're keeping that in mind from a commercials commitment of traders perspective. So let's take a look at the weekly now. Now we know what the monthly is. We know it's expanded upwards. This could just be the beginning of a monthly expansion upwards to head lower during the middle of the month. Let's take a look at the weekly to give us a little bit tighter detail though, okay? So this is the weekly chart. Same chart as the monthly, just a little bit different. Let me remove this Fibonacci so we can see a little bit more. So we see that we consolidated here and then we broke away from that, right? So, and now we're left with a fair value gap here. There's still outstanding fair value gap down here as well. But for the time being, we have this as a potential bullish order block for us to trade down to this week or next. And I think that that's exactly what we're going to do. I can certainly see, and you'll want to also consider this. So this area here, this whole area here, you'll want to pay attention to these levels within the span of this range here. That happens to be 1811 to 18121. So that 100-point range is going to be really crucial to see if we drop down to there, if we continue to head higher, or if we kind of like just see one of these things zigzagging between them. We are at all-time highs. The market's on crack, as ICT says it is. So we're gonna, while we know that it is probable that we retrace, we are continuing to play the concept that if we see price head down, we expect it to continue expanding upwards until we see a massive displacement otherwise. Now, what's important here on the weekly chart, remember on this candle, this low is 553.75, 546.25, right? So it was slightly lower. I was hoping that this candle wouldn't close, if you remember last week's prep. I was hoping it wouldn't have dropped down here, so that would form this as a higher short-term low. But what has happened here now, we've created a new short-term low. So we have this short-term low, short-term high, short-term low, higher high, higher low, right? And all this stuff. Let me remove that so you can see these here. There's no short-term high here. They just created a higher low, and then now potentially a higher high. So that is important to me because we haven't shifted away from that bullish trend yet. Not yet, at least. And so for the time being, you can certainly play the shorts in the first part of the week if we see this go short the first part of the week. Now, if we see price head higher for the first part of the week, it's possible we'll continue an expansion for the week, or it's possible that it's heading higher to head lower to consolidate in the month of March as seasonal tendencies tend to show. So what do I mean by that? So if we take a look at seasonal tendencies for the month of March, and there's no way to really make this larger, but you can kind of see the month of March is in this area to this area here, right? Roughly this range here. And if you look at it in the 15-year time frame, we have been bullish. In the 5-year time frame, we've been jagged. In the 30-year time frame, we've been very jagged, tight range. So from a seasonal tendency perspective, hey, what's up, Phoenix? Good to see you, brother. How you doing, man? Glad you could pop in. We are talking about some higher time frame concepts to help define your bias for the week and month, potentially. So we know that this seasonal tendency in March happens to be consolidation, right? So, hey, what's up, Dip Chibao? Congratulations on that PA account. I hope you're keeping it tight, keeping your risk low, and enjoying the slowly but surely buildup of your performance account. So this week, we have a little bit higher so far. We have a gap beneath us. We can potentially, a dynamic gap beneath us. It's not a true gap yet. It's assuming that if price were to fall down at this point in time, this gap right now would exist, right? In a buy side perspective, meaning sell side is inefficient in this sell side. So I would expect to see or look for sell side initially, potentially down back to this bullish order block. Or if it heads higher first, then maybe down in the middle of the week or later in the week. It is non-farm payroll, so if it does head higher in the first part of the week, I would expect it to head lower towards the latter part of the week. Now, keep this in mind, we are still in a bullish trend, so if it does head lower, you need to be lower risk, and you need to hold on for and take smaller bits and pieces. Yes, could you short now and it could drop precipitously and it could be like the best trader I called the top kind of a deal? Yeah, sure you could, but I mean, I'm not willing to take that gamble. I'd prefer for the weekly chart to tell me, hey, we've dropped below this short-term low here. If it drops below that and closes, then I will consider a market structure shift potentially. We need to see how ADP and non-farm payroll Friday treats us, right? So in this week, we know that we're prone for consolidation. So again, leveraging less during this time is probably going to be the better move. But again, don't let me tell you what to do. If you want to leverage and over leverage, that's fine by me. It doesn't impact me. It might impact you though. And you'll want to, you could, take my advice with a grain of salt. You don't have to follow my advice, but this is something that I've seen from having traded a couple of Marches now. Let's go down to the daily chart next. So daily chart, same deal, NASDAQ, right? We broke above this all-time high line. That blue line is an all-time high. We broke above it and have been creating new all-time highs, right? Now, I was originally expecting something in the month of February to the month within the month of February for a market structure shift or a seasonal tendency, a quarterly shift. Now, this quarterly shift is indicating that, hey, so far we are continuing to head bullish. So for the time being, and I'm giving it a grace of roughly 4 months here, because if you look at the beginning of November, we had 3 months, October, September, August, where we headed lower. This was the quarterly shift, lower. In this case, we have 1, 2, 3 months higher, and now a 4th month higher. So I'm giving it the grace that we could see 4 months in terms of a quarterly shift, and we'll see if we start to see evidence of consolidation so that we can potentially move lower. That's what I'm really keeping my eyes out for, to be perfectly honest. It is an election year, so it's possible that people we see it continue spiking higher. But the probabilities tend to lie with us looking for evidences of heading short, especially in how big of a premium we're at, right? Now, one thing to consider is that we ended up using this high, this long-term high, we pretty much used it as a mitigation block, right? So everybody who was short there for a long period of time, when they came up above it and came back down to it, we saw a displacement above that. That typically indicates it's a mitigation block, right? Now, keep in mind the monthly chart, yes, we did see it head higher, but if we start to see a high, low, higher, high, and then a lower low form and displacement, that's going to indicate to me that we're headed south. Until that happens, I'm going to assume that we were heading higher or we're consolidating, and probably more so we're consolidating in the month of March. So this month, I'm not super high probability trading. If you are trading, I like consolidation on the higher time frames more than major, massive moves. So I am anticipating one of these kind of things where we consolidate. And maybe we could travel down to this bullish order block down here, but I'm assuming we're going to consolidate. So I'm assuming any movement higher is going to be faded sometime in the next coming days. Within the daily chart though, if we look closer, so we now have, and let me get rid of this here. We now have what's called a daily buy-side imbalance. Or actually, yeah, that's a buy-side imbalance on the daily chart, right? So what I'm going to do is I'm going to mark those, since this also happens to be a 3 candle away item here. So I'm going to mark the high here being 18019.75. And we are marking that with a daily purple so that we can use that again and mark the low here. Right there. And this low is 18030.25. So we're going to mark those as a daily buy-side imbalance high and daily buy-side imbalance low, right? Or I guess BISI high, sorry. And then we will also mark this one as a daily BISI low. So I'm going to have that on my charts for the next few days. I would recommend you keep that on your charts as well. Some of you may want to highlight it like one of these, right? And that's fine too. Do it however you wish, right? You can have it as a blue box if you want. I'm going to like to keep it as lines so I can refer to them a little bit easier. But you can kind of see that this space here, right? That is a imbalance. So I think that could be a draw. This draw could be also to this bullish order block. We've traded higher. We have a volume imbalance beneath us right this moment before this candle fully forms. We have a buy side imbalance beneath us, so a lot of things beneath us that we should at least trade back down into before we head higher, right? So we're going to keep that in mind as well. And what do we see on the 4-hour chart next? So let's take a closer look at the 4-hour chart. Okay, so you can see how we've made it out of this consolidation range here, right? That goes actually lower, but I just can't go lower right now. So we made it out of roughly this consolidation range, and we've beamed higher. So I would like for us on a 4-hour chart, I would like for us to at the very least trade back down into this bullish order block. Let me get rid of the projections from yesterday, or from Friday. Actually, you know what? I'll keep those on for the time being because I need to take a screenshot of those. But this is a bullish order block on the 4-hour. So I'm going to keep that on my charts. I'm going to get rid of this bullish order block. We've already referred to it multiple times. If you were part of the streams, you've already aware of it. So I'm going to get rid of that. And we see this 1-hour. We'll go down the 1-hour chart to close out, but 4 on the stream. Hello, traders. Oh, thanks. Yeah. No, this is good. You guys are the ones that are really looking forward and really dedicated to prepping for the week and seeing what potentially could happen. So on the 4-hour chart, we know that we are looking for a higher time frame drawdown down into this area, right? These daily imbalances or this bullish order block here. So for the short term, I could see us heading down into this bullish order block and then potentially staying within this range of the new week opening gap. So be very attentive to this, particularly this week's new week opening gap, because I think it's going to be referred to multiple times this week. I would recommend having this on your chart so that you have it available. I do think we're going to head lower. We might head higher, but I think we'll consolidate before we hit non-farm payroll. So these two levels here, the close on the week last week, 18,321.5, and the opening on this week, 18,335, right? So about a 12-point range is what I'm going to be referring to all throughout the week, and you probably should too. Okay? So on the 4-hour chart, I like this bullish order block. Keep that on your charts because that will be important. And then lastly, you know that that hourly imbalance that we had a balanced price range, we were looking for it to come back above it. In fact, we were looking for it to refer to this already and bounce off of it, but it had a really, really difficult time. You guys saw price head back up to it, come back down to a real-time hour gap, close in that real-time hour gap, and then head higher, treated it as an inversion, a balanced price range, and an immediately rebalanced higher on Friday. That was a beautiful example of a immediate rebalance. If you don't have this 1-hour SIBI on your chart, then draw it, go back and study it, go back and watch immediate rebalance videos from Michael and ICT. And I thought it was a fantastic example of a immediate rebalance from entering a balanced price range. So, yeah, that's about it. I think, we see this 4-hour bullish order block marked on the 1-hour chart. You can kind of see that there's another bullish order block further down on that, but we can consider this area to be the first area of potential movement. And what else is over here? We have a mitigation block here. So everyone who went short on this mitigation block, everyone who went short here and now is underwater if they held, if price heads back down here, those short people are going to buy to break even. And so will smart money buy at this fair value gap, combined with this 4-hour bullish order block. Now, if we look down at a 15-minute chart now, so this is a 15-minute chart now, right? This is that same 4-hour bullish order block. What do we see down here? There's another bullish order block down here. There's outstanding there's outstanding fair value gap waiting down here, and that's the only one available in this whole range. That little bit of outstanding buy side imbalance, I think, is going to be important this week. So, for example, this is the imbalance I'm referring to on a 15-minute chart. So I think that will be referred to in the context of that 4-hour bullish order block. So keep that on your charts. This was a bearish order block that got blown through. We don't need that anymore. And then we have also a high, low, higher high, lower low, bearish breaker, broke in London, traded back up to it. We traded through it, traded back down to it. And this is another phenomenal example of a bearish inversion breaker, or sorry, an inversion breaker. Now, we traded not quite to it, but we were close to it. And there's a mitigation block right there that we landed on before we got to a breaker. Now, what are the rules on mitigation block breaker in terms of what ICT says? What takes precedence, right? Well, if you study the core content, you know that mitigation blocks take precedence over breakers. If we are looking for discount PD arrays, mitigation blocks will always be referred to before breakers are. So what did price do? Traded down exactly to that mitigation block, 1 pip or 1 tick, and then headed higher, right? So if it does travel down to this area, that buy-side imbalance will be important because it's within the context of the 4-hour bullish order block. We need to see price head lower for us to do that, though. This was a absolute crazy tear higher. There's a lot of imbalance beneath us, and if we are going to head higher, we need to head lower first. So either Monday or Tuesday. Let's say Monday heads up higher, and let's say that it just continues to peak like crazy, right? I expect if Monday heads higher, I expect Tuesday or Wednesday to head down to this area and then head back up to the new week opening gap for Thursday unemployment and Friday non-farm payroll. We'll take out both sides. Whatever liquidity gets formed, both sides will get taken out on Friday. If you see a liquidity pool form and you see non-farm payroll, take that out. This is the real magic here. If you see a liquidity pool, meaning multiple relative equal highs form and it couldn't break, but then it comes Friday ready for non-farm payroll, the moment you see price take that out, you're probably likely to reverse at that time. I've just noticed that over non-farm payroll many, many years. Watch and observe, see if it happens. If we are super bullish, maybe it just breaks it completely and never comes down to it. But it's non-farm payroll is generally less probability than all other days combined. So you have to be careful on that day. You can trade after the news, but try not to trade during the news. It's going to be volatile. You're going to blow some accounts. So this is kind of what I'm looking for right now. That's my sentiment on the market. So my sentiment on the day, on the week, on the month even. So I don't expect this green candle to last the whole time. I expect to see some black. I don't expect to see a fully black candle, but let's see, right? So you've got 4 weeks in these next couple of weeks. I do expect some black and bearish candles here. Let's see. Congrats, Dipchi Bao. Oh, nice. Phoenix is congratulating Dipchi Bao on the past account. Yes. It's always good to congratulate folks on that. So there you have my bias for the week. It's consolidation. That's what my bias was last week on the hourly chart, if you recall. I don't have it on this one. I think it's on my other chart here. So yeah, you have my bias for the week, consolidation overall, and I need to change this now, but I think that's kind of cool to have this and all of our targets achieved on Friday. Every single one of those got achieved, and then some that I put in the chat during the stream. So one of those days that was really good. So again, let's wipe this. I don't have, oops, what happened here? So consolidation, higher time frame. I don't have any other bias right this very moment. So, and as I shouldn't have on a Monday, but once Monday comes around, I'll have a better sense of where we're going to go, right? So if we're heading higher first in the beginning part of the week, I'm fully expecting us to come back down, consolidate a bit. So that's my bias for the week, is a consolidation. Be careful with major runs. Watch out for turtle soups. Those of you that trade turtle soups, you're going to have a great time this week. I think, in this month, really, in general. Unless election year pulls something crazy, which it could, we will remain overall bullish, but with the knowledge that March can bring consolidation. It could be one of those anomaly years where we just keep on running and running and running, right? It's very possible. But for me, I will be looking for liquidity pools to be taken on a 15-minute time frame. And I'll be looking for that new week opening gap to be referred to multiple times this week, as we consider overall consolidation. So let's see. That is it for me, though. That is it for the week. So again, this week I will be heading to Vegas on Friday, so I won't be streaming on Friday, so it'll just be Wednesday stream this week. But as you all know, I try to drop where I'm looking in the beginning of the day on Mondays, Tuesdays, and Thursdays. There is a small chance that I will get to work from home on Thursday. If I do, I might open up a stream then. But until that time, this is what I'm hoping. This is what I'm looking for this week. I'm not looking for massive runs. In fact, Monday, you want to be careful on Monday because of how meteoric this run was. Be careful trading in the AM sessions. I would look for a afternoon run on stops or a PM session trade, because AM session is going to be rocky after this big of a range on Friday. Let's see. Kirktown, Johnny, those projections from last Friday, could you go over them again? Specifically, how you drew the fib for those new all-time high targets. Oh, Kirk, that's a really great question. So you will probably, this is going to be a little bit more advanced here, but Kirk, you've been exposed to ICT concepts before, right? So you'll note, so this is a different look that you have on, I have it on a different chart, right? I don't have this look open all the time, but if you look at these projections here, this is a price action model 5. That's the one that I mentioned. Delphine had asked about that earlier, but with my projections here, I'm using these in conjunction with other lines that I've seen from earlier projections throughout the week. This is going to be I don't recommend you doing that for now until you figured out your model first, because this is kind of like better and a more advanced technique that works if you have your core trading down first and foremost, right? So I used price action model 5 to help project what I'm doing. So these ranges here, this is the central bank dealers range. This is the Asia range. And there's also another range called flout. You'll understand that if you go study those, the whole, I think he mentions it in content, whatever the month is. I think it's either 5, 6, or 7, where he talks about IPTA data ranges. He'll talk about this more in price action model 5 as well. But if you don't understand that month's content where he talks about IPTA data ranges, you're going to have a tough time understanding what this is going to tell you. But long story short, Kirk, I use a couple of confluences with different levels across the board in order to find key levels that I might be targeting. So Price Action Model 5 will teach you how to put it all together, but you need to know, this is like deep study stuff where you need to go deep. You need to understand that core content month. I think it's, so I think it's in his core content, I believe. Is it 5? Let me see. It's this one here. This is one of the most difficult chapters in all of the 2016-2017 content. It is long. It is not for the folks who are going to watch a video once and understand it. You will be confused. Be prepared to be confused for many days, weeks, months. This took me multiple months of returning back to it, trying to study it, getting confused, getting discouraged, trying to apply it, not applying it correctly, coming back to it, trying to understand it again. It will be brutal. So you don't need this, but it helps greatly to understand this. And this is the core foundation towards understanding Price Action Model 5 here. So this is Price Action Model 5. This will go deeper into detail, but if you don't have that base content figured out, you won't understand how to project it. So Kirk, that's how I got those projections. It does take a little bit of finesse and a little bit of work, but by studying Price Action Model 5, you will understand how to project those big runs and big levels there, right? So that's something you don't need. It is something that is a nice to have. If you have your trading model, then you can trade plenty fine with that. This is more for trying to project out the highs and lows of the week. Cool? So hopefully that was helpful. That gives you an idea of where and how I come up with those. All credit to Michael and his teachings, right? He's done a really good job. You just need to go through and study it if you're willing to go that deep. WF, do you need to analyze dollar for better results? Yeah, I look at dollar all the time. I just haven't looked at it today. So within dollar, I look at it more on a higher time frame perspective. So if we look at it on a monthly perspective, we know that we reached a previous monthly SIBI here, and we came back down, right? But on the grander scheme of things, this is a monthly chart, right? What does this look like to you? Consolidation, distribution, 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 consolidation, displacement, consolidation, accumulation, displacement, consolidation, accumulation, right? So to me, on a higher time frame perspective, this looks like a market maker buy model in the making for dollar. Now, price has been heading higher for quite some time, right? Price has been heading higher in dollar in the previous month. You can see in the previous month of February, this one here, right? You can see it was overall, it headed higher, but it consolidated a bit, right? So we're in this area of accumulation. And if we go down to a weekly chart here, we can see that accumulation even more in more detail, right? So accumulation, displacement, more accumulation. And so my opinion is that we are meant to eventually head higher across the board. Can we head down to this area again? Absolutely. Or we could stop here because we've traded to that area of accumulation and traded lower. We could actually see this head lower first to target these relative equal lows down here on a weekly chart perspective as well. In fact, all of that could happen, WEF. It could trade all the way down to here, leading to a huge rally, and it could trade all the way down to here, and that would still be within this whole area of consolidation on the higher time frame, considering that there's a market maker buy model to potentially figure out. Now, this could be also market maker sell model too, right? So we see that it's had trouble breaking previous monthly highs. Even here it did, right? So it could be that we are at the beginning stages of a market maker sell model too. That's very possible. It's hard to tell. But when I look at like a 3-month perspective, it's a little bit simpler. I see this accumulation here. I see us moving back up into an imbalance, internal range liquidity, right? There's still some internal range liquidity left on the 3-month perspective. And I see us head lower. This is a nice second stage distribution below this previous market maker sell model. After market maker sell model, typically we see a market maker buy model. And this could turn into market maker sell model there, or it could finish off the market maker buy model and head higher here. If we were to see that, that would mean markets overall are going lower. But we've also seen dissonance between dollar index and markets. So if the Fed decides to cut this year, we will see dollar will head lower and indices will head higher. And so we could come down here, take out these relative equal lows, come back, take out these, and then continue to head higher to finish out that market maker buy model later on if markets decide to tank. I don't know how long this will take. Remember, this is on a 3-month perspective, so these take a long time to form. But looking on the daily, it's tough to tell. We're in the middle of this dealing range, in the middle of this dealing range, and this price action is in the middle of this dealing range too. So it's a very, very strange part of the dollar index to be in. It's why it's so difficult to trade, because we haven't had clear direction yet. So dollar index, I don't pay attention to as much on a day-to-day basis because I know it's going to be tricky, but on a higher time frame, I look at that for sure. WF. Yep. Kirktown, thanks, Johnny. At least I have a roadmap for deeper understanding. Yes. And I'm sure we'll talk about it again, Kirk. I'm sure we'll talk about it like again in the future. I mean, don't get discouraged. Just whatever you do, just make sure you are studying a little bit at a time. You're like, I had to rewatch those IPTA videos, those 2-hour, 3-hour long videos. I had to rewatch them, pause probably at least 10 to 20 times now. And so it's a lot of time I've spent with that, and it's taken a long time to understand. I'm starting to understand it a lot more, a lot better, and being able to backtest and apply it, right? So, yeah. Yeah, I think that's it, though. You know what my bias is this week. I will be assuming we're going to consolidate, so I will be looking for turtle soups primarily in this type of range. So, yes, can we go lower? Yes. Can we continue higher? Yes. Is it strange for us to continue higher? Yes. I would expect to see some level of displacement and retracement first. So, yeah. I think that's it. WEF. Thanks, Johnny. I really appreciate it. Yeah. It's really hard to look at dollar each day, but it's definitely worthwhile looking at. Same with interest rates too. You have to pay attention to those frequently. I don't talk about that much, but I pay attention to those in the side. And ICT teaches you how to do that in the in the 2016, 2017 mentorship. So take a look back at those videos if you don't know what I'm talking about. But with that, I have to get going. I got to help the wife with some laundry, and got to get some comforters, in the downstairs. Got to get those comforters all dry so we can fall asleep tonight. Hopefully, like, starting this a little bit earlier is a little bit better too, so you can get to sleep a little bit earlier. Hope you took some notes, but if not, you can rewatch this as you need to. But yeah, I think that is going to be it for me today, and hope you have a good time trading this week. For those, I do want to mention one last thing before I go. While they did extend the 1-day pass until March 4th, again, don't feel like you have to trade and try to make it in 1 day. It's going to be more beneficial for you to pass 1 or 2 at a time and then try to understand what it is and what it was about your play that passed it first. There'll be plenty of other sales. Just give it, if you're patient enough and you wait for a long enough period of time, there will be other 80% off sales and 90% off sales occasionally. So you don't have to FOMO and say, hey, these are never coming back, but you do need to understand your trading model. You do need to back test and make sure that you're trading your model each and every time. And you do need to understand that you will be stopped out sometimes, and you need to have good risk management if you're going to maintain these accounts. So I'm gonna leave you with that. Paula Chow. Yeah. Hey, thank you, Johnny. No, thank you for joining, Paula. And I appreciate the likes as always, and the subscriptions and the subscribes. If you haven't subscribed already, I appreciate if you like this, if this is valuable, helps you figure out what's happening during the week. We do this every Sunday. So I'll continue to do this in the coming Sunday if I'm not too hungover from Vegas. But yeah. So I love doing this. Love having you here. It's always great to see you all. And yep. Take care. Make sure you rest up well. Make sure you stay hydrated. And I will catch up with you throughout the week. So take care. Looking forward to any of your questions. Just drop them in the comments on any of the community posts that I post. And yeah, that's going to be it for today. Have a great evening, everyone. Get some rest, stay hydrated, and we'll talk soon. Take care.